Alrighty, good morning, everybody. Happy Monday morning to you. Hopefully, everybody had a great weekend. Just trying to make sure that I'm actually recording this time versus. There we go. All right. So it is working. That's a good thing. I just wanted to make sure my streaming was working this morning because I obviously had a little issue on that. Starting out. So, first of all, welcome. My name is John Novak, and I am not Mark. Mark is out of town till later tonight at least, so he'll be back tomorrow. So, I've got two objectives. Number one, not to destroy everybody's hard work that you guys have been doing for trend trades. Most important thing to me is to make sure that you guys know what you're doing. Um, you know, I'm gonna give you guys some more stuff to think about. And again, look, I don't want you guys to go stray away from what we do. Again, as you guys go through the basics, especially if you're brand new to Nexgen, my suggestion, if you're brand new, is to spend a lot of time over here. This trigger line reading, the 101 basics, and again, when you go to these pages, scroll to the top. Um, Trigger line reading is very, very important. When you go to the 101 basics, and again, I wish they had a little like hyperlink where they could click and make it go to the top. If anybody knows how to do that on Discord, let me know. If not, I'll leave my picture down there. But as a new user, you're going to have to go through the basics, and you're kind of building a foundation of what it is you're looking at. More importantly, how to read it. And I took this out of one of the webinars that I did, and again, it's a video that pretty much explains 99% of what you need to know with the trigger lines. And as you go through the video, it's from a webinar that I did. It does a really good job of going through the trigger lines and everything that you need. And more importantly than anything else, I just want to show you guys where this stuff is at. Because if you get the basics down and you get the trigger line reading down as you work your way into the self-education page, and again, I've got this picture on here to scroll up and start at the top of the page. Our hope is, and again, this is very much, the stuff that mirrors the educational outline online. I think Discord gives us a little bit better ability to kind of put our thoughts together. So as you guys get going and you spend time with Nexgen, in the Discord, obviously, we want you to spend a lot of time in there. Let me get back on my room here. And again, for those of you guys who are new, obviously there's instructions, but just in case, this is the section up here you can click on and you can blow it up. You can shrink it down. You can actually pop it out. And, you can put it on a different monitor if you want to. I don't know if not everybody knows that. So you have the ability to put that in or out of the Discord itself. And again, those things are in the instructions, but sometimes seeing it works out a little bit better. You can also blow it up. You can minimize people's names. And, look, it's Monday morning at 9 a.m. The S&P is notoriously slow on Monday morning. I actually pulled it up last night to kind of get ready, and we were like right here at midnight. And I was like, oh, man, there is nothing that's going to happen. And, essentially the last 10 hours it took them to get down here. So we're probably not going to pick up speed until after 9:30 in the S&P, and that's just the way it goes. I did want to, I was kind of waiting till more were in here. I wanted to spend a little bit of time with this chart today with you guys. You guys, by show of hands, just say me or not me. Have you guys started working with the market flow yet? Just to kind of get a gauge of who's done what, and have you guys gotten started with it yet? Yeah. Okay, good. So a lot of people have. That's good. In the beginning, and again, they don't teach you trigonometry in kindergarten. At least when my kids were in kindergarten, they didn't teach them trigonometry. They did triangles, circles, red, blue, 1, 2, 3, ABC. And, that's really, I don't know of any other way to say it, but you have to kind of start out with something very simple when you get started. And the reason we start you out with 2 charts is because, once you add a 3rd chart, you're exponentially increasing the amount of things that you have to look at. And I always use the example, if you flip a coin, it's heads or tails, right? If you guys play the lotto, what's the smallest lotto pick'em that they have? They have 3 balls, right? And if I'm not mistaken, there's 999 combinations when you use 3 balls. At least, it was. Sometimes they keep raising the numbers up to up to 72 now. But anyway, the odds of having 3 things line up are a lot less than the odds of 2 things lining up. And what we're trying to do with you guys first is get you to recognize, look, there's one look that you guys all know, right? I think everybody's okay with this one now at this point. If the triggers are going down strong, probably going to go down one more time. Unless it really runs into something super, super worthy of being a termination condition. And it's the same thing going up, right? If we run into a termination condition and then we have this trigger line configuration, the chances of us going up a lot more is exponentially increased because of what happened down here in the box. And again, as you guys go through, some of the information in Discord and the educational room, just let me make sure we go through this here. There's one video that's in the plan. It's in the user guide, and it's this video about tops and bottoms. If you have not watched it, you must. Period. End of discussion. You should probably watch it. I haven't watched it myself in probably 4 or 5 months, but I actually go back and watch it every so often myself because, it's like, what did I say? Reinforcing my own lessons to myself is very important. I actually watched the management video the other day because I was like, what the hell's in that video again? And I watched it and I was like, oh, okay, that's what it's supposed to be in there. So, this is all the stuff that we teach, but even I go back and rewatch these things. So if you've watched it once, great, good for you. When you get to 6 or 7 or 8, 9 times, let me know. Because, look, I don't know about you guys, but the older I get, the less information I retain the first time around. So it takes a couple times to have it stick in between the ears. Now, obviously, my intention is to add in a little bit of stuff for you. Gary, your post, yeah, Apex is having a 90% off sale. 90% off first month, 80% off subsequent months. And, you know, again, when you guys, just to give you guys one more, you know, and this is the thing that I love about Discord. I put together an Apex funding page for you guys. It's not 100% inclusive, but if you're a man who hates the crap out of reading directions and you want a shorter version, this is it. There's still some stuff to go through here. But if you know, again, I've got our link up here, which should take you right into the page and should add in the discount. It says 50% off, but once you actually hit start now, it should actually put in the current code. Damn it. There we go. I thought I'd close my Discord. I did add in some information about connecting to both live accounts and the Rhythmic for Apex accounts on here. If you want to trade your own money live and Apex's money, you have to get a second connection from NinjaTrader. I also added in a lot of information about the trailing threshold. And, you know, one of our clients, Stevens, built out an indicator that tracks your live trailing drawdown threshold. He's working on that. He sent me a video. It's pretty cool stuff. We'll talk about that in a couple days, but it puts a little thing on your screen saying, hey, here's where your number is at. So you don't have to go check and guess. And anyway, it's a pretty cool thing. We'll talk about that in a little bit. When he is actually done with it. He's almost done with it. Anyway, you know, look, the other thing is this trailing drawdown for Apex, it goes away once you get funded. So, you know, you may want to trade and take the money, and then once you're funded, you don't have to worry about the drawdown as much as you do in the very beginning. Anyway, I put payout methods, fees. A lot of people don't understand the fee structure on what you're going to have to pay to actually do this. So I did put that in there. So anyway, there's a little bit of good stuff in there. Not 100% all inclusive, but I tried to get the main bullet points for you guys in there. So if you're interested, you guys can go back in there. I think you have to type in the correct code if you have Apex and Top Step. Do I really need an account with NinjaTrader? No, you don't. You don't have to have an account with NinjaTrader, Gary. You can trade OPM, other people's money, and be just fine. So that's the answer to your question. You do not necessarily have to have your own money. I'm going to ask a rhetorical question. If you can't win with their money, how the hell can you justify risking your own? Actually, you guys can feel free to answer that if you want, but if you can't win with your own money, or you can't win with their money, why would you risk your own? You know, over the last 150 years that we've been doing this, the number one, and I mean literally the number one thing that most people can all agree on is it's not the software, it's not the rules, it's you. You're the one that's going to make the difference. And, you know, the people who post pictures in class tend to do better. The people who write the rules on the chart tend to do better. The ones that don't sit in the background silently doing stupid trades and not posting them in because they don't want to look stupid live. Look, if you do the right trade and you lose, it's okay. Did you guys see those two that I posted in just a little while ago? And again, look, I'm going to do a couple things for you guys. And again, look, this was the trade that I did. I'll explain it to you real quick. Did you see this? I was going short at resistance because all of the triggers were down. Pretty straightforward, right? Now, this is a 21.3 gold chart, but again, support broke, the triggers are down, sold resistance. That's not really a mystery, is it? Everybody okay with this? Now, if you only trade a 13-2 chart, that's not really your trade, is it? But if you know, again, this is where you guys have to have a plan. And again, I'm okay with trading at the edges of fibs with a small little risk. And again, look, you know, as the edge of fibs go down and you take some profit, again, I'm gonna go through how I use this chart today, if you guys don't mind. Anyway, long story short, I did a second trade, which I think you guys saw that. If you didn't, it was a trend trade from the mid band with the triggers going down, which I think everybody can get on board with that, right? Strong triggers down, trend trade at the mid band. I got out after the second divergence. I sat through the first one and had my stop out of the way. And then the second one I didn't want to sit through, and ended up losing 4 ticks on that. Which, you know, look, 4 ticks in the big scheme of things is not a big deal. So I made, I don't even know how much I made on the first one, a lot. So from resistance to the first support and second support, and then the continuation didn't. So anyway, I'm going to go through my plan today, if you guys don't mind. Gary, all right. On your statement, you can be aggressive for the next 4 days if you blow out your account. A new account is less than the cost of a reset. Yes, it's cheaper to buy a new $50,000 account or $100,000 account than it is to reset. You are correct. Right. Here's the trick. How about just win all the time, and then it solves like 99% of every you know, almost every problem you guys have as traders, you can solve just by winning. And look, to win, you have to have a plan. And Gary, we know yours because you do a excellent job of posting in your rules and your trades as you go. What I would like to do today, look, I'm going to give you guys something. I'm going to post it in the room. You can download it. Can you guys see this? My screen okay? I'm going to blow it up just so you can. Can you guys see that? Look, this is not going to be different, but it's going to be better maybe than what you're using. And that's my objective, is to try to be better. And again, look, you guys at some point, you have to settle in on what makes you feel the best. So for me, you know, and I've done a lot of different ways of doing it. And for me, I really like the 13 range chart. And, you know, I've been kind of going back and forth between the 8 range and the 13 range, and I've been running them both. And I've decided, you know, last week I was like, you know what, I'm just going to get rid of the 8 range chart and only use the 13 range chart. So I want to go through my rules, and look, I've put a bunch of examples in here. So I wanted to go through these if you guys don't mind. And then we'll go look at the market. We have about 15 minutes before it opens anyway. You guys, this looks very familiar to you, right? Is the market coming from a good top or bottom? And remember what we talked about as far as this video? Here, I'll go to Discord. I'll go to the self-training. Remember we talked about this tops and bottoms video? This video is literally a 45-minute explanation of this one rule. So I want to be clear about this. Is the market coming from a good top or bottom? Unless you watch this video, you're not going to be able to define, I'll put it in the chat room for you, what this means. Have you guys all watched that video? Who has, who hasn't? I know if you're brand new, you probably haven't. That's why I'm stressing this to you, because you have to watch that video not just once, but multiple times. Because again, look, whenever you look at a market, you're going to have to answer a question. So let me just use a 21-3 chart for an example. Okay, when you have Fibonacci support, so you see down here at the bottom how we have divergence from support. That's a good bottom short term. And then when you make a higher divergence, that becomes a really good bottom. And traditionally, when you have a divergence plus a higher divergence, whatever happens over here when the triggers roll up usually gives you a pretty big move. Now, this was Friday, but again, just to put things into perspective, look at the size of this move. Even just the first pullback, 61 up to 76. That's a pretty big move. And again, the move started a lot earlier than that. After the divergence was true, this technically is where the move started from. So you're looking at 54, basically 21 S&P points straight up. So after this divergence, and it's good because it's a second higher divergence, you can be really assertive with long trades really through the end of the day. And again, when we say get assertive with long trades, we're talking about following rules. How are we going to follow rules? Well, when we know the market's coming from a good bottom, we can be more assertive with taking trend trades. This is exactly the same plan you guys have. Yes, everybody has the same thing. The only thing I added is if a trade is taken, manage out when there's a divergence or loss of momentum. That's what LOM means, loss of momentum to me. When a good top or bottom is not true. So, again, some of you guys have this in your plan, Gary. I think you do. Is it coming from a good top or bottom? And I watch you post trades, and you will take a trade if there's not a good top or bottom, but you also manage those trades a little bit better or more assertively. This is the same rules you guys have. Strong triggers, do a 5-1 trade, blah, blah, blah. I'm not going to really go through that as much, the 5-1 trend trade. You guys know it, right? I don't have to really, what the hell? Stupid Microsoft making me go to Bing. Hang on. Or Edge or whatever the hell that was. Again, look, I'm not going to go through this as much today. Mark will go through it 97 times in the next week. But trade number one, rule number one is strong triggers to the upside, strong triggers to the downside. I think everybody has that. Rule number two is quite simply make sure that we do not have a termination condition. And again, we've got most of this stuff pretty well lined out, but short version is if you hit support and the triggers don't get past it, this is where, you guys have seen this picture every day with Mark. Can I ask you a question? Doesn't Mark say every day this resistance should hold and this resistance may hold? Isn't that about right? Because of these triggers, this resistance should hold. Now, if you guys go back to the short trade that I did earlier in gold, let me see if I can find it. Here, watch. Let me just click on this. I'll post it in the room for you guys. I already posted it once, but let's see. Control and V. Shoot, it's not doing. Here, I'll do it this way. And again, look, I think, when you put this stuff into practical use, so if you look at these triggers down here, can you say pretty comfortably that this resistance ought to hold? That's the basic 101 for anything that we do with Nexgen. Now, you may not use a 21. You can, but you might not normally use a 21-3 chart. Now, if you don't use a 21-3 chart, what is this? This becomes a don't go long area for you. Would you guys agree with that? Because your triggers are going up, so you run into resistance that's supposed to hold, so don't go long. But instead of how about don't go long, go short. Now, again, you have to add more charts to what you're doing to make that happen. At some point, you're going to have to decide. Somebody told me the other day, they said, since you only teach on a 13-2-5-1 chart, how do I know if it's a termination condition on a different chart? And the termination conditions are the same no matter what chart you use. The expectation of continuation is the same regardless of the chart you use. So you may find, like Siva, if you've ever seen him post, he never uses any of these charts. He uses a 21 range, a 13 range, an 8 range, maybe even a 34 range chart. So, he's taken the rules that we teach, meaning this should hold, this may hold. And again, that's rule number 2. We want an area that should hold to help us, not hurt us when we're doing trades. As far as entries, there's 2 types of entries you can do. There's the anticipatory entry, where you're looking at your chart and you're anticipating this area is going to hold. Everybody agree with that? I mean, you're basically saying, I'm going to put an order here and pray to God that it comes back, and then when it does come back, it stops and goes up the other way, which is fine. You're supposed to do that. I'm not saying that's wrong. But today we're going to talk about reactionary entries, which is going to be a little bit different, and some of you guys may say, what the hell, it's too much, I'm not going to do it, and I'm totally cool with that. So anyway, long story short, this is your entry, pull back to an area, and then obviously, with trend trades, the anticipation is that if the triggers are all strong enough, we're going to get the bounce. So, again, that's what this checklist is right here. This is your very traditional, very simple, very easy checklist for trend trades. Joel, his targets are considerably larger than $100. But you have to think, he's been trading the same plan or similar. Everybody makes little tweaks to their plan as the market evolves, and, you might change a chart or fine tune an entry or something, but he's been trading the same basic principles for 15 years. So he's very, very, very comfortable when he's going to place a trade and how long to hang on. He expects his targets to get hit. Anyway, long story short, I added in a little something on here that you guys do read in the education. If you have a loss or you manage out, use a 3 trigger rule for a second chance trade. If my 13 range market flow chart agrees, that's my rule. Now, you guys have this rule already in the educational material, right? So let me open the picture. Everybody familiar with this one? You guys have seen this one a lot, right? If you do a trend trade and you have a third divergence, you're getting out, and then obviously if the triggers roll over, you can always get back in again. Is everybody okay with this picture? So you have a trend trade and you have a reason to get out. Third lower divergence with trigger lines going down. Those basically your 2 exits. Everybody okay with this one? Now, the other thing that I added in here, oops, excuse me, that was wrong. The other thing that I added in here is, in the video from the good tops or bottoms, dagnabbit, a little out of practice here. All right, open in a new window. Here we go. This is one that a lot of people forget about. If you have a really good top on all of your charts, you're going to get one more trend trade that's probably going to break a fib. Do you guys hear what I'm saying? This is the one trade that I see a lot of people skip. They'll get the first trend trade because it's easy and obvious. And then if you have a great top on every single chart, you almost always get one more trend trade than you think. So I wrote a rule in here in the plan that says, if you have a good top or bottom, take one more. Now, take it, manage it, of course, but before I go any further, do you guys have questions about this? This is your normal 5-1 trend trade. Nothing has changed on this. Everything that Mike, I was going to say Mike, I'm watching Mike type. Everything that Mark teaches every single day, nothing is different. Nothing has changed. Now, on a 50-50 trade, and you guys hear Mark talk about a 50-50 trade a lot. Let me see if I can find a picture of a 50-50. I bet I can. On a 50-50 trade, and when we say 50-50, as Mark says, it's not the odds of a trade winning. 50-50 means that half of the triggers are below the resistance area and half of the triggers are above the resistance area. Everybody who hadn't had software for a year, type in yes or no if you understand this. The triggers are down strong and you're probably going to do a short trade. But there's times where, you get a 50-50 look and your other charts that you use, like let's say a 21-3 chart or a 13 range market flow chart, tell you don't do it. Just don't do it at all. Sometimes they say do it. So again, sometimes they say yes, sometimes they say no. But when you only have one chart, or one in a 5-1 chart, you don't have a lot of options, right? It either is or it isn't. So this is where, again, it's important to have contextual awareness, which you hear me say that a lot in that video, right? Of what happened at the top. If the top was not very good and not from an area, a bad top, then this little overrun's probably going to reverse the market back up. So check it out. For example, in a live market environment, look at what we have right now. This is a 21-3 chart, by the way. Somebody tell me what they think about the top. It's not really from areas, and, we had a good bottom, if you remember, the two higher divergences. So this is the 50-50 look that we look at, and we're like, this is the one that has a tendency to go whoosh, really, really quickly to the upside. Usually right after the open, too. They'll just take off and go to the upside. They don't have to do anything, but does everybody understand this? You have a mid band and you have a fib, and your small triggers are trying to get below, but the large triggers are so far up here. This gap, there's a lot of ways to look at it, but, again, down, yes, but there are some issues. And again, when you guys are building your plan, I just wanted to show you mine. If it's a 50-50, but the 21-3 chart and my 13 range chart say take it, then I'm going to take it and hope for the best. If my 21-3 and 13 range chart say no way, then don't do a 50-50 trade. Does that make sense? So I'm adding in one more layer of complexity. So if I was to look at this, and again, sometimes I'll miss a trade, but if I was to look at this chart, I would say no to shorts on the other chart for the moment. Anyway, just a quick assessment. And sometimes it goes anyway, but again, it's about taking trades that you feel really, really comfortable with. Now, by show of hands, just say yes or no if you don't mind. Have you guys started adding in tops and bottom, either momentum or high volume trades yet? Because if you're new, you're probably just doing trend trades, and that's okay. That's a good start. But you're not doing it yet, okay? You will eventually. How many times can you watch the market stop at an area and go the other way, and eventually you start going, you know what? I've seen this 7,000 times now. I should probably start getting paid for it. If I'm going to sit here and watch it stop and reverse and go the other way, I might as well get paid. So again, look, this is nothing different than is in the rules. So let me bring up the rules. So this high volume area trade that's in the rules is exactly the one that I use. So I don't want you to go, holy crap, he's got some special magical trade that I'm never going to get and he's holding out on me. Nope. It's the same damn trade you do. You get the same stuff, guys. Now, the trick is, you know, and again, this is a very old picture from like 2020 or from like September of 2020, I think. The trick is to not be in love with the area so much and to wait for the area and triggers. It just so happens the market is very, very nice about giving us examples of this. Check this out. I'm going to open up. This is a picture that I posted earlier. Did you guys see this picture? You know, look, this is the 13 range chart. Here, let me do this. I'm going to change this up just a bit. Bear with me. I'm going to make it bigger. Where the heck is it? Okay, there it is. I'll save as. All right, so all right. Can you guys see this? I'm like going ridiculously big with this now. So again, it's a little big, but you know, again, look, whenever you have a termination condition, this one's kind of termination with the trend. You know, the thought process is to make sure that your trigger lines help your high volume area. Does that make sense? You know, this one's kind of a reverse. This one's with the trend in the high volume areas. The market was really nice about the top, and I want you to see something, okay? And again, look, I want you, look, I think visually when people explain stuff to you, it just is a lot freaking easier. You guys let me know if I'm off base on this, but so look, when I look at this for a top or bottom, all charts and all market flow charts agree that a top is true, yes or no. And location of the triggers and not past the Fibonacci areas. I added in this example this morning, which is the picture that we're going through right now. So look, the rules say And look, you're more than welcome to break the rules. They're your rules. They're not my rules. But the rules say if you sell a high volume area, which again, look, this is very tempting to sell right here. Wouldn't you agree? I mean, if you were looking at the edge of fibs and you're like, yay, it's going down and there's resistance, you could do it, but you better manage it very tightly. And again, when you talk about rules, I like visuals. The rules say no triggers are past the fibs. So you see how these large triggers are still going up and they're beyond the fibs? Like 8 out of 10 times, the market's going to go up higher. So again, this is a really good visual of the rule of no triggers past the fibs. Everybody cool with that? Now, it bounced. If you sold right there and you took, 2 or 3 points and got out with divergence, you'd still make money. But it's not it's not the best trade. It's not. But interestingly enough, after the market flow chart has 1, 2, 3 divergences and the large triggers are going down, and more importantly, the triggers are actually agreeing with the resistance area. Now you have a high volume line trade that has all of the triggers and the Fibonacci helping at the exact same time. Everybody see that? Yeah, and again, look, you have to wait a long time for everything to look right. Everybody give me a Y or an N or what the hell are you talking about? But we're talking about, basically there's 2 trades you can do with Nexgen, right? You're going to, if you recognize the top and the triggers roll, you're going to either sell a high volume line or some type of momentum trade from the top, which is what we're talking about in my plan. And then obviously if everything's strong, you can do a trend trade. So everybody cool with this? You guys don't need that picture, but I'll give it to you just in case. But again, this was such a great example of, it's literally almost the same area and the same high volume line from left to right. The difference is the triggers. Trigger location and trigger direction is totally different. And again, I think the other thing that the market flow is very good for is, confirming that a bottom might be true. So if you hit 1-to-1s, fibs, and outer bands, and you have multiple buy signals, you're not really going short at a high volume line. Does that make sense? I mean, you could sell the high volume line, but you'd have to be very careful about it, because now we have a bottom true. All right, did I lose you guys, or are you okay? So again, we've only talked about trend trade, your normal, regular old trend trade, and then a normal, regular old high volume trade. Now, again, there's a secondary entry. I think personally, there's 1 of 2 entries at the top or bottom. The high volume line is so freaking obviously easy, because if the triggers and line agree, then get in and hope for the best. The one that's a little bit maybe harder for newer people is an example of a momentum trade. And a momentum trade still needs the exact same things that a high volume area trade needs. You have to have all your charts say it's okay, we're done, it's a top. And without that, you can't do a momentum trade or a high volume trade, period. So you still need this to be true. Does that make sense? Hopefully. And then, again, with momentum trades, they're difficult for new users because you have to kind of jump in. So again, the first most important thing is that you have termination conditions on all of your charts. So again, 4189, 1-to-1s on the 21-3 chart. Everybody okay with this? Termination. And you don't really get a termination on your other charts right away. And you don't really expect one. And again, look, I use the 13 range chart. Because look at the trigger lines over here. You're not really expecting the market to go down, because the triggers are up and past the fib. So you're expecting the fib area to hold and bounce. And then, again, do you guys remember in this trigger line reading basics, there's basically, remember I said that there's above the triggers or below the triggers? Do you guys remember that portion of my little webinar and the trigger line info? You're either above the triggers or you're below the triggers. And in order to do a momentum short, you have to be below the triggers. So you have to have a good top, lower divergence, and be below your triggers. Now I blew this area up so you can see it a little bigger. I want you to get something in your head today that I think is going to serve you well. And again, it's the concept of, am I below all of my triggers? So if you use a market flow chart, 13 range or 8 range or whatever you use, doesn't matter. Are you above or below your triggers? Easy enough? Now, for me, I watch the 13 range chart because it's slower. I have gunslinger-itis. You guys know what that is? It's, I know so much and I see so much and I try to do too much, and I'm a gunslinger and I'll shoot at everything that moves, and I have to be very careful. Gunslinger-itis. And I have found, for me, when I use a little bit of a larger chart, I don't feel the need to do as much trading. And, and again, part of this comes from sitting next to my wife, because she's like, God, you wear me the fuck out with all the thinking that you do. She's like, just wait for the big ones. Did I say that out loud? I guess I did. And you guys know, if your brain is too hyped up, you're looking for stuff. You're like a dog chasing a car, you know what I mean? And anyway, long story short, I've slowed it down, and I said, I'm just going to get rid of my 8 range chart, and I'm just going to trade the 13 range chart because it's just slower. It's easier, and I don't care if I lose a trade, but I don't like getting in and out, in and out, in and out. And I'm going to go through each of my 13 range things that I will allow myself to do. By the way, if you guys are watching the market, remember how we said this will probably go back up a lot higher because of the 50-50 look? Right? Well, there's appropriate times, but I will be quiet. I will stop it. So anyway, look, we did what we were supposed to do, which is get a big bounce. Now they're going to have to make up their mind. So I'm not overly excited about S&Ps yet anyway. All right. So for momentum, you guys will notice white paint bars a lot when you get breakouts of your triggers. Somebody was asking me, Shogun, you were asking me last week, and I was showing you some of these pictures last week, right? The breakouts of your triggers. Now, in the rules section, not to skip around, but down at the bottom, I wrote out the rules just in case you're curious. So 5-1 trend trades should have strong down triggers on your 13 range chart. So there's no mystery on what I use. I wrote it down for you. 5-1 trend trade long should have 13 range small trigger lines going up. Now, if you guys notice, do you guys remember When you look at my chart, you're like, what the hell are these scraggly lines on your chart? These are the 13 range small triggers. I superimpose them on my 5-1 chart. No. Actually, I did it long time ago. And it just gets in the way. It's just a mess. It doesn't complement as well as you think it would. You know, somebody asked me this the other day. It's interesting. I don't mean to digress. But anyway, look, if I use the 13 range triggers for trend trades, and this becomes a trend trade for me, which we'll look at. I have an example of it. And again, as you go forward, you'll see that when price is below the triggers, you're not really going long with trend trades. And then when the price is below the triggers, you can start taking trend trade shorts. Anyway, so I superimpose the 13 range small triggers because I have a rule for it on my chart. Does that make sense? Anyway, you got to have a rule for it. But I wrote it out for you. Price bars have to be above or below the small triggers to help with 5-1 trend trades. Once you get on the wrong side of your small triggers on a 13 range chart, it's not really helpful. I also have to say that in a trending market, the 8 range large triggers are very similar to the 13 range small triggers. Fibonacci says, so if you're watching the two side by side, the 8 and the 13, when it's trending, they're almost identical. Anyway, for what it's worth. After a good top or bottom, the triggers must be weakened, and small triggers have to cross up or down. And the price must break above or below the 13 range large triggers before trading in the opposite direction. This is my slow me down thing. And this is where we come back to the picture we were just looking at, which is, where did I put it? I don't know where I put it. All right, I'll go get it again. Where is my plan? There we go. Sorry, ADD. So look, this is where we were looking at the close-up of this one. And again, this is a tough one for newer traders to take because you have to say to yourself, I already know it's a good top and I'm getting a breakout to the downside and I'm willing to sell a little pullback as a momentum style trade. It doesn't mean you're going to win. It just means that price bars have at least closed below the triggers and have a lot of momentum to the downside with that white bar with all the dots, and you have a little better shot. Does that make sense? So it's the visual clue of, all right, let's go ahead and do it. Which is the early version of let's wait for a high volume line after the second bar closes down. So you're already anticipating that that line is going to come before it comes because of strength and direction and momentum. Anyway, all right, I'm moving on. So here's an example that I put together for you of a momentum long with a close above all triggers on the 13 range. So it's the same thing as this one, but in reverse. All right, so I'll go through it with you. You guys tell me if this is beneficial or not. And again, look, you don't have to technically have a range chart to do momentum trades. But working from left to right, does everybody recognize that this is fib support with a pivot stop out? It's a termination spot. So, you know, again, anytime you have a termination condition, you're not going short, but, you know, can you go long? And again, the first trade that you're going to get is either a high volume line trade or a momentum trade. And again, You recognize the momentum in your small triggers over here on this chart. But it's a it's not just one thing, it's three things. It's termination plus a close above all triggers on my range chart. That's my rule. And then I can go long. So it's, again, we had talked about the concept of reactionary trades or anticipatory style trades. When you're going through our trading plan, the only trade that we teach you initially is the anticipatory trade, right? I mean, this is basically the trade that we start you out with, because if you can get good enough at reading your software that you only do 5-1 trend trades that are high probability, you've learned how to read your software well enough that you start seeing the other things pop out at you. Does that make sense? If you try to teach everybody everything on day one, they get overwhelmed and they say, oh, it's too much. I'm just not going to do all this. I really don't want to make $1 million a year and have to do work. I thought this was going to be easy, so I quit. Literally 70% of traders that we encounter say that. They say it out loud. Oh, this is too much work. I don't want to do it. Okay. I don't care. There's a lot of that going around in America now. It's too much work. I don't want to do it. I have an aunt who does all of the, like the U.S. Open tennis and ESPN events, and she's done the Super Bowl, and she has so many jobs to do, and she can't get in. She can't hire people to work because they don't want to work. Anyway, that's off subject, but it's amazing to me. Anyway, long story short, I'm going on. So look, you guys have this anticipatory trade because I'm going to buy a trend trade on a pullback. So I'm teaching you something a little bit different. This is more of a if-then reactionary type trade. You're not anticipating something happening. You're waiting for something to happen. Does that make a difference? You understand what I'm saying? You're not sitting here going, I'm going to put a limit order at the bottom and hope it's a bottom. You're saying if it is a bottom and we close above and we have momentum in the small triggers, I'm going to buy the mid band and hope for the best. So you're layering these things together. Instead of anticipating an area holding, you're going to wait for it to hold. Wait for it to close above, and then you're going to go. So I wouldn't call it an anticipatory trade. I would call it more of a reactionary, type trade. I don't know. Maybe that's going too far. Right? All right. So is everybody okay with this? Again, what's the one common component that I put in here? And again, this is to save me from me. Closing below all of the trigger lines is the prerequisite for me to be looking for some type of momentum trade. Everybody cool with that? Now, example momentum and high volume area trade. So I wonder what this looks like. Let's take a look at it. So again, there's two trades here. The first one was a momentum trade in yellow, which technically I should have gotten in on the way up, but it was, I was actually doing a replay when I was doing this. I was like, oh, momentum trade. And I got in a little late, but it doesn't really matter if you get in late as long as you put your stop in the right spot. But look, close below all the triggers. White paint bar should have sold a pullback here. It was a little late just because it's replay. And then high volume line inside of the wide triggers at a fib. Isn't that exactly the look? I mean, if you look at this high volume line with wide triggers, isn't that exactly what we were talking about in the last one? Where there's no triggers above the fibs. Over here, there's triggers above the fibs. Over here, there's no triggers above these fibs. Again, that's a really big difference. This was the picture that we were looking at. Triggers above the fibs is basically financial suicide. You're going to get excited about getting in. They're going to let you have $100 or $200, and then they're going to run you out of town. It happens almost every time. And when you get this look, and again, look, I don't give a rat's ass what chart you use this look on. If you sell at fibs with a high volume line with all the triggers down, I bet it works on every time frame chart on the planet, no matter what time frame it is. 5 range, 8 range, 13 range, 21 range, 34 range, 5 minute, 13.2. It doesn't matter. It's where the triggers and how wide are they, and then you get to sell at the area. And it was the same thing here. Again, the momentum is the first one, and then the high volume trade is the second one. If you guys have questions about these, let me know. But I put them in here so you guys can look at them. Here's an example of a market flow continuation trade. So again, let's take a look at it together, and let me just explain it to you, and we'll see if you Shogun, this one's going to make more sense to you because I showed you about 10 of these last week, right? Where on the market flow chart, after we close back above all of the trigger lines that are going up, we have a tendency to be able to trade momentum style looks. But the short version is we're using the high volume areas of the breakout bars. So I have like 30 of these pictures, but you know, after like 4 or 5 of them, they're all the same. Closing above all of the trigger lines going up after support holds. Crazy idea? Now, this chart sucks because you guys would be waiting for a pullback to 53 that's never going to happen. Or it might happen, but anyway, it's a breakout type trade with momentum. It may not be for you, and it's okay. I put it in there anyway. You guys can study it. Go back and look at your charts. I will leave that one alone. Another termination condition, close above all the triggers. Let's take a look. I bet you it's going to look familiar to you at this point. So, first things first, go to the bottom of your chart. Fib support, fib support, fib support, and higher divergences. So remember in the rules that I wrote out for you guys, more importantly down here, price must break above or below the 13 range large triggers before trading the opposite direction. This is my rule for me because I tend to see the top and bottom so much earlier than it actually is a top or bottom. So this is my personal rule to slow my ass down. And what it looks like on a chart is so shorts until we hit support, and then no long trades until we get this right here. So you guys see where my mouse is right here in the middle? See how we closed above all of the triggers? And now I'm looking for a pullback over here. Does that make sense? So again, could you have bought down here? Sure, but you would have been hoping because the triggers were going down, right? Could you buy right here? Sure, you could, but the triggers are going down. I bet you $1,000 that every time you go long and the triggers are going down, you lose more than you win. Jose. Let's go back to the last picture. Jose, what are your rules for an entry? Where do you normally buy or sell? All right. So in this case, you would probably buy around 68 at the mid bands and fibs. Is that what you're thinking? So my order was a little bit higher, but somewhere inside of this window is where it's going to look very much like a trend trade. Would you agree with that? So over here, this would be a little bit early, but, you know, pull back into the mid bands and triggers going up usually is a pretty good spot. Jose, does that make sense? You can buy or sell wherever the hell you want, but you better have a rule for it. No rules, no trades. I was just more highlighting the idea that you had to close above all of your triggers first. Does that make sense? I wasn't necessarily saying that's the perfect spot for an entry. I was more highlighting the concept of closing above all the triggers before thinking about going long. Everybody give me a Y in the room if you understand that. I'm not saying that's the best place to go long. It's probably a little closer to 68, but that's not really what I was trying to highlight here. So I'm glad you guys give me some feedback because it's very helpful. Something you're going to have to go study because you're not used to it, and that's okay. All right, so let's... do you guys mind going through these examples? Hopefully they're helpful for you. All right, so let's go to termination at Fibonacci and a momentum long. I don't know if we did this one or not. Hang on just a second, guys. All right, sorry about that. Look, this is the same thing. Sorry about that. That was my, you know, I had facet joint ablations on Friday, so they were calling to see if I was still alive. Again, look, this is the same breakout concept. And again, you can see supports there, you know, and then it might hold, and that's totally cool, and it did, but the idea of waiting for a breakout of the triggers, for me, it slows me down. That's two negatives and a positive in one sentence, Jose, so let me try to decipher. Don't you buy market if you're not filled and you get a market flow signal? No, I don't. I mean, I could, but most of the time I don't. It's, you know, look, the idea is to still do the same thing, to buy support, right? Nothing has changed. You know, when I do this, webinar thing, you guys remember the whole thing? Look, Jose, this picture right here, I recognize that the market's now going up. I still want to buy a pullback into support because that's how you minimize risk and maximize reward. You can get a really crappy fill and buy up here if you want and risk 3 times as much and hope you don't lose to make half as much, right? So if you buy the high instead of buying low, you're going to make less and risk more. So it's a fine line in there between, you know, get some pullback, but not so much that you miss it, but not so little that you're risking 5 points on the S&P, right? So same thing when you're going short. You're trying to sell at some type of resistance or really close to it so you can minimize reward or minimize risk and maximize reward. So, you know, again, if it breaks out, sure, could I have bought 2 or 3 ticks higher and been fine? Sure. But, you know, again, sometimes this happens really fast. You know, so you're sitting there and you're like, okay, it's support and holy crap. I mean, they're just taking off and they're just screaming out of there. And you're like, oh shit, I got to put a trade on. Hurry, hurry, hurry. Where am I going to go? Let me go above the mid band at 1-to-1, put your order in. They miss you by a tick or two and then they make up bars. And you're like, dang. I've been waiting for that for an hour and a half and I finally got it and I missed the entry. Sound familiar? It happens. So, you know, again, could you have given up a tick or two? Sure. But you would have had to risk, you know, realistically down here. Because you got to have your stops out of the way. Or, you know, if they do come down to 43 and you're in at 48, you still have to have your stop below 43. Does that make sense, Jose? Stop still has to be out of the way initially. So, you know, these are the ones where you're like, I hope it fills and takes off and then I can bring my stop up really tight. Anyway, usually they come back and give you a fill. This one didn't. All right, let's see what we got. I forgot where I was. I don't know why these don't turn. All right, so look, this is the same one, Jose. The one that didn't get filled. Let me see if that's right. See the order at 69.25, Jose? How it didn't get filled? This is technically the same bar in the same area later. You know, so if you would have gotten the first one, you could have made money on the first one. And then you could have had a second one. And that happens a lot with momentum trades, doesn't it, guys? Where you get the first momentum trade and it makes 4 or 5 points and then it goes all the way back to a trend trade and then you do it again. That happens a lot with momentum trades. Anyway. So, long story short, that same area that broke out gets retested. And that happens a lot. But this is literally just a 5-1 trend trade over here with the 13 range triggers helping. Everybody okay with that? This is a 50-50 trade where remember we were talking about 50-50s? Let me make sure that we're cool with this again. I'll bring the picture back up. Let me find the picture. So remember this 50-50 trade where we were talking about it and we're like, some of the small triggers are below and some of them are above and some 50-50s you'll do and then some you won't. You guys remember that? So again, what I was saying in my 50-50 plan, if you guys remember, is 50-50s if we're against the 21, 3, and 13 range, skip them. And which basically means take them if the 13 range chart helps. And the thing about a 13 range help is the entry inside of favorable small triggers on the 13 range, then I'm going to do a 5-1 trend trade. So it all goes together. So let me pull it back up. So does that make sense? So let's look at the picture together. It's a 5-1 trend trade just like you normally know, right? Nothing has changed. But look at the small triggers over here on the 13 range chart. Are those helpful triggers on the 13 range chart? Now, this is where the 50-50 comes from. Hang on. Let me be specific. 50-50 is this, look. So watch. I have the short version of it here. So watch. I'll have a long version and a short version for you now. I'm going to put them together. I'm going to copy paste them together. There you go. So look, I made a picture for you guys. So 50-50 is when small triggers are below the area, large triggers are above. So isn't this 50-50 over here on the left? Small triggers are above the area, large triggers are going up. Everything's up, but we're kind of straddling an area. Does that make sense? Maybe the word straddle helps. So it's 50-50. Everybody cool with this? And the only reason I took it is because my rules say if the 13 range chart small triggers are helping, go ahead and take it. See what happens. Now, it could lose, but, you know, again, this doesn't have to risk this much. Probably only had to risk two points on this one, or 2.5 points, but it's a 5-1 trend trade with the 13 range triggers helping. So even though it's 50-50, I'll take it anyway. Hopefully that makes sense. All right, let's go on. We're moving on. All right, so that was this picture. And the next picture, the 5-1 trend trade after a market flow signal is true. So you remember the breakout trade we had earlier? That was down here, where everything closed back above, and then you buy the high volume area and hope for the best. The next one was technically a trend trade. And, you know, when you look at a trend trade, you have three things, right? You're looking at your pivot stop out over here, right? You're looking at the width of your triggers. You're looking over here at your range chart, and you're saying, what are these triggers doing? And then you're looking at this little fib, and you're like, okay, is that the end, or am I going to keep going up? So again, I think when you put wide, large triggers and strong triggers on your 13 range in combination with this 13 range trigger combination, you know, again, only focus on the middle chart and think fibs and both triggers up. Would you go long? Yes or no? So for me, the answer is yes, but, you know, wait for an up bar just in case they go down a little bit more. So I got in a little bit late, but it still worked out okay. So this is more, you know, instead of just getting in right here. Does everybody understand this? Jose, you can stop answering now. I want somebody else to answer once or twice. Again, you're trying to make a decision on whether you're going to take a 5-1 trend trade or not. And the 13 triggers help out considerably. That's all it's about. Everybody cool? Anybody out there? I feel like I lose people when I go through too many examples, but you can see what's the common thread, guys, with every one of these examples. Wide, large, or small triggers. On not only the dynamic Renko chart, but the range chart. That's the secret. It's not really magic. All right. Now, if you're in a trade, this is another good use of the market flow. So let's say you're in this trend trade. And you're saying to yourself, you know what? I love the trend trade. It's a good trend trade. I'm going to take it. The other thing is, look, prior high volume lines, stranded buyers or sellers, or pivot stop outs at the edge, those are your target areas to watch out for. Prior stranded buyers or sellers makes the best first profit target you can come up with using market flow. Go study it and tell me what you think. But if you are short or long and you run into a prior stranded buyer or seller, depending on which way you're going, it is a heck of a profit target. The other one, I put this one in here too, but this is the end of that trade, by the way. Can I ask you guys a question and answer honestly? And again, look, I think you're going to get to a point where it looks the same before and after. But look, after this trade is over, doesn't that look easy? It's like, oh yeah, that's a trend trade long. Sure, I see it. It's easy. And you're like, damn, yeah, right. Strong triggers on the 13-2. I see it. Well, but here's the thing. You have to have the same look before as you do after. Because you don't know it's going up. There's no way to know if it's going up. But when we get into this trade, I mean, look, this is where you're getting into it. You have to say strong triggers up, yes. Small triggers up, yes. Trend trade area, yes. You don't know what's going to happen after the fact. I mean, there's no way to know. So when it looks all easy after the fact, it's because it looked the same exact way, and we anticipate this is what's going to happen. But when you're actually getting filled, look at the difference in the 13-2 bars. Here, look, I'm going to post this in. What's the 13-2 bar look like over here when you're getting filled? It looks like a big fat red down bar, doesn't it? And again, for it to look like this when it's over, it has to be a big fat red down bar when you're getting in. And you hope that it goes up. There's no guarantees, but, we're risking a couple points to find out. So the before and after is, again, you guys would have to go through and do this. This is why Mark says post your pictures in the class. Why are you getting in? Or does it follow your rules? Do you have rules written out for this trade? Right? Look, my rule says odds favorable triggers on the 13-2 and 5-1. I had that. If I put this checklist on there, it'd be true. Do I have an area inside of favorable large triggers on the 5-1 chart? Yes, I do. Mid-bands, 1-1s, 13 triggers, both of them large and small. Do I have an entry inside of or around or close to favorable small triggers on my 13 range? The answer is yes, I do. I see it. It's right there. So again, this is my rules and I'm following my rules. Termination conditions expected to hold. Yeah, we'll see. I don't expect them to hold right off the bat. So again, before and after, after makes it look easy, but it in your brain, it looks the exact same before and after you've done it 1,000 times. Yes, they do, Shogun. And again, I'm not. Here's what I want you to do first, and then you can come back with questions, okay? Either in the other room or in here, but I want you to go through the market flow section that I put on the Discord, because I actually have every answer that you asked the question to in here. So, like, what's a yellow bar? That's in there. What's an antenna bar? What does it mean? What's the pattern? What does it look like? I got it. What about a bearish antenna bar? Yes, got it. What's a white paint bar? What does it mean? Well, it's written out. What about the arrow after a white paint bar? I've got it written out. What about stranded buyers or sellers? You heard that term already. It's written out. So I want you to go through the directions first. Don't put your grill together and say, why do I have extra pieces? So read the directions first and then put your grill together. And then come back to me. And if you have questions, I'll be more than happy to answer them. All right, let's see. Where was I? I think I have a couple more of these. Example of a trend trade with all the triggers going your way. I have so few of these examples because they're so freaking obvious, but just to put one in there for you, does everybody recognize that all the triggers on all three charts are going down, and when they are all going down, you usually get a trend trade from your mid-band and fibs that ends up working. What do you think? Pretty obvious? Now, you don't know it's going down. You hope it goes down, but again, it's the same look, mid-bands and fibs and all your triggers, and you look at both of these triggers and both of these triggers, and you're like, okay, I guess I'll go short and hope for the best. Right? Same thing right here. It's like, I guess I'll go long and hope for the best. I'll lose a couple points, or I'm going to end up winning I think it was like 4 to 6 points. All right. I think I got a couple more, and then we'll go. So just to recap on the S&P today, how crappy is this? We're still on the same damn bar that we were on when we started the class an hour and a half ago. They haven't even made one 21.3 bar. It's still 50-50 to go down, probably not, and then probably up to here, and it's in the same damn spot. Yeah, so we haven't missed much on the S&P. All right. Example of a 13 range 5-1 divergence management. Oh, no, I skipped this one. Okay. I like this one because remember what I told you guys, that you're going to have two types of trades. An anticipatory trade where you're going to get in at the spot and hope for the best. And again, I did this one anticipatory style where I got in at the mid-band and was hoping for the best because everything was going down. Yes, there was some fibs here, so we won't talk about that. And then, again, look, this is a decision that you kids are going to have to make on your own. And, again, sometimes, you get that trend trade and then you're like, oh, those little boogers, they ran me out, and then they're going down anyway. So you may say to yourself, I'll take a second chance if some type of market flow bar says it's an okay thing to do. Does that make sense? You know, and again, this one goes back to the same concept of waiting for the small triggers to roll over. Remember in the plan at the top where we said, if you're in and you get forced out of a position, remember, wait for the small triggers to roll up and then you can go long again. That's basically the short version of the rule. Well, it's the same thing when you're using the market flow. So if you think it's still going down because of areas and triggers, you know, this is that same little small triggers roll over. I was in a little bit early, but this bar gave me the confidence to go short that I needed because I knew it was going down one more time to at least test the low. Now, could I have waited for that bar in the first place since I was coming off of support? Probably. Because if it never happened, I would have never gotten short. But because it was inside of my 13 range large triggers, it met the rules, and I'll manage out and get back in again if I have to. So, do you get in on the way up or do you get in after a bar confirms? I can't answer that question for you. Confirmation costs money. You're going to have to risk a little more and make a little less. But as you study the different situations, you know, again, look, because we had hit fibs, I should have waited for a down bar probably the first time. Does that make sense? Because of this, I probably should have waited for that. But I did it anyway, and I did it on purpose so I could make a picture so you guys could talk about it. All right, moving on. I think I have one or two more, but actually I have a few more, don't I? Let's see, where was I? I think I have. Sorry, I'm just going to open this one up. All right. This is another situation that you'll find yourself in a lot, especially if you use the larger charts. You guys see this with Mark a lot when he talks about hitting a fib and having the large triggers far away that you're going to get a bigger bounce. You know, this happens a lot at the mid-band, right? And look, the market flow also helps kind of define where these areas are going to be too. You have one-to-ones and fibs and you have a high volume line at the same spot, you're not really going to do a 5-1 trend trade. Does that make sense? But the high volume line and the fibs and the triggers all are in the same spot. So anyway, it's just, you know, again, this is that high volume line short that we talked about earlier. Once all the triggers are going down and actually agree. Yeah, I mean, you run into some good support, so it's going to bounce higher. I don't know how else to say it. If you run into something that's pretty good, you're going to get a bigger bounce, right? Which is what we were expecting on the S&P when we said when you hit a mid-band and fib, you're going to get a bigger bounce. The question is, after a bigger bounce, can you go short or is it going to keep on going up? We've already answered that question way earlier this morning. We had good bottoms, not a really good top. So the answer is we're probably going to end up breaking out eventually. I don't know how freaking long it's going to take, but because there was not a really good area on the top, we're probably not going down. I know it's hard to see, but you guys get it? good bottom, not a great top. We're probably not going down yet. Not saying we can't break out and go down. We can, but that's why they're struggling at the mid-band and support. Anyway, a good day for some visual lessons, thankfully. And we'll go look at some other stuff here. But hey, this is kind of the same thing. If you hit support and there's a big gap, you're probably going to go back up. All right. Here's a big one. My brother and I have gone back and forth on this a lot. How many times, by show of hands, you guys tell me if it's true or not, do you get in, make $100, get stopped out at break even, and then the little bastard goes on and you would have made $500 anyway? How many times? Like 700 times you make $100, break even, and then you know, sometimes it keeps going, of course, and you would have lost more money, but I have found, yeah. So, you know, look, and again, the market flow gives us a visual representation of where the buyers and sellers thought it was important. So, you know, as you guys start playing with the market flow, you know, look, an 8 range chart or a 13 range chart, I don't care what you trade. 13 range is harder than an 8 range. An 8 range is easier for new users, so don't do a 13 range to start off with. It's going to be harder. You guys hear what I'm saying? Start off with an 8 range. You will find it easier in the beginning because it's very close to the 5-1 chart and 13-2 chart, and it's more responsive. The 13 range chart is much closer to the 21-3 chart. So the 8 range and the 13-2 go together really nicely. The 13 range and the 21-3 go together really nicely. All right. So again, the thought process is don't put your stop at the best place to go short. And when you look at this, I mean, look, we had, remember, already the high volume line, and then we had a sell signal. And then we had a high volume area from the sell signal, which was pretty much the best spot to go short. So, you know, again, you have to kind of say to yourself, is it worth the risk? Because you're going to look at this and go, a divergence. Is it going to get me? Right? And, you know, look, for me, as long as we don't close above all of our trigger lines, then trend is going to remain down for me. Again, you also have to know your context. Did we have a good top? Are the triggers strong enough? Right? There's a lot more that goes into it than just don't put your stop at your entry spot. But you're going to see this so many times that if the market flow says down at your entry spot, don't put your stop there. Because they're just going to get you and then go down. And you're going to be like, damn it. And look, I put the next picture in here just to show you what it is. Almost always you end up like getting stopped out and then it goes down and you're like, God bless it, I should have stayed in. I knew it. I knew it. Well, you have to have a reason why you're going to do something. Does that make sense? You can't just do it because you think it. The triggers and the fibs and the high volume line and the short signal and everything set down, so I'm not putting my stop. They're going to have to take 2 points from me or else we're going to end up getting down to the right spot, the edge. Because we had a good top and because the triggers are down strong and because everything's set down, I'm not getting out with this one little divergence. Did that make sense when I said it like that, all in one line? Because of a good termination and because of the wide triggers and because of the high volume area and the wide triggers and the fibs, I'm not getting out because of this teeny tiny little divergence. Hopefully that's beneficial. Now, could they still get you for 2 points? Absolutely. But I was willing to risk 3 when I got in. So if I only have to risk 2 to stay above everything, I don't really care. Unless the conditions change, relax. Anyway, hopefully this is a good visual for you. I want you guys to go back and look at your market flow charts and say, where did you get bumped out break even, and what did the market flow say? I'll be interested in your feedback. Buying a breakout of triggers with high volume areas on the 13 range. I actually have 3 examples on here. Do you guys have a copy of this? I put one in earlier, but look here. I'm going to drop a copy in just in case you don't have it, okay? Buying a breakout of your triggers with the HVA areas on the 13 range. Shogun, these are probably a lot of the pictures we went through. Last week, I did this one. This is one of those ones that I did when we were talking about it, I think, Shogun, if I wasn't mistaken. So look, first things first, don't start where the damn trade is. You're missing the point. What happened at the box at the bottom? Termination conditions. After every chart has a termination at a Fibonacci, then I'll buy the breakout of the triggers on the 13 range at the area. Now, doesn't that look like a momentum look on your 5-1 at the same time? What do you think? All right. Questions about this one? I hope I'm not losing everybody. I'm hoping to inspire you guys to go, you know what? 5-1 trend trades are really cool, but there's a little bit more out there than meets the eye. Once you the trick is, more importantly than this trade will become easy for you once you believe that the bottom is true. Once your chart reading skills get better, that, hey, I really do have a good bottom, and 90% of the time it's going up. So if I break above everything, I'm going to buy a pullback and hope for the best. Yeah, that's okay. Look, you've got years and years and years and years and years and years to do this. As I said earlier, I think it's horrifically super duper triple important that you have this video perfect, dead to rights. I mean, you really have to have this video dead to rights. If you don't, you're going to not be able to qualify the bottom as well as you would like to. And if you don't qualify the bottom as well as it ought to be qualified, then you're going to end up buying fake breakouts all the time. Because you can't buy a breakout if the bottom is not great. Does that make sense? Hopefully it makes sense when I say it, but if the bottom sucks, don't buy breakouts. You're going to lose every time, or 90% of the time. Hopefully that makes sense. All right, you guys may have to go back and watch this video again. And I am recording it, so you can watch it. All right. I have a second example of this. Shogun, this is the ones that we were talking about. Shogun, I want to answer your question right away. That's the whole point of having a really good plan and automated software. I don't give a shit. I don't care at all about top-down analysis of all the instruments. It doesn't matter. It only matters, do I have a good top or bottom now, and are my triggers going up or down? Or are my rules met? Nothing that you do on Monday morning at 7 a.m. is going to be beneficial for you at Tuesday at 10 o'clock. And it changes quickly, too. So it's useless. And, you know, I used to do that, I have to say. And what I found is that if I do top-down analysis and I say to myself, these guys are going up today because it's kind of biased to the upside, I have a horrible time going short when my rules are true. Because there's something in the back of my brain telling me, you know what? You're about to get screwed because didn't you say it was going up this week? So my opinion is it's really important to stay neutral and be able to absorb what is it saying right now. Because you never know, you know, look, once you get a bottom and you get a breakout, you never know how far it's going to go, and you never know if you're going to win or not. You literally don't know. Because sometimes, you know, look, you get in and you take 5 or 6, 7 points. You're like, yay. And you're like, man, I wish I would have stayed in. Well, why would you have? Right? So, again, it's staying in the moment is the only way to, I think, day trade anyway. That's my opinion. All right. It's not a good idea to have a bias. It's a better idea to just read what's happening now and go from there. Anyway, I think this one's moderately self-explanatory. You guys tell me if it's not. There's a whole bunch of fibs, and instead of waiting for everything to roll up, I feel pretty strongly about buying a breakout of the triggers. You know, I bought one the other day on crude oil and lost 10 ticks. You guys, if you were around last Friday, you saw that. So they don't always win when you get a breakout, but usually if it's a white paint bar breakout from a good spot, you get a chance at it. This looks just like that one from the top, doesn't it? And again, if you use an 8-range chart, you're going to end up with the same trade. You're going to have a high volume line trade that's kind of in the same spot as that breakout trade. Remember what I said about that? So it's okay if you use an 8-range chart. I don't want to scare anybody, say you got to use a 13-range chart. An 8-range chart's even easier because all the triggers are going up. Buying the high volume line's easier. Or doing a trend trade. Anyway, food for thought. So I have more examples if you guys want to keep going. I can do this all day. The funny thing is almost every one of these examples is from like 2 or 3 days worth of trading. So it happens all the time, always and forever. Again, all triggers are strong with a trend trade. I don't really think I have to explain this one, do I? I only have a couple of these in here because they're so freaking obvious that, Gary, these are the ones that you take all the time without missing them, right? Let's see what you got, Gary. All right. So that's the look. Cool. All right, we'll see what happens. I'm going to keep going real quick. We'll blow through these real quick, okay? Not real quick because there's no reason to, but look, MB, who, his name is Mark, and I'll leave it at that, but not Mark Novak. MB, you'll see him in the room every once in a while. He was one of the very first people. You know, when I did the market flow back in 2016, I guess is when we wrote the market flow. He was the first one to say if the small triggers are down really, really strong and your white paint bar goes up below them, you almost always get a short signal. So, you know, we always call this the MB trade. If you ever hear it said like that, it's just because MB kind of came up with it. But look, now you guys get the benefit of his years and years and years of studying the damn thing. A white paint bar up into super down triggers usually creates a signal. You guys understand that? So it doesn't, you know, it's just like a white paint bar that breaks out of, well, shoot, I lost that one. Sorry, a white paint bar that breaks above all of the triggers usually keeps going. You know, that's the whole thing about a white paint bar. It's a volume spike, if you will. So are they spiking it to break out, or are they spiking it to reverse against you? Anyway, the whole point is, if you get a white paint bar up and the triggers are really down, you usually get a signal. Now that was way up here. The next one is a white paint bar up into very down triggers, but it also has a trend trade on the 5-1 chart. So again, if you see a white paint bar up and you're not already short thinking that you're going to make it to the mid band, you probably might not. Anyway, depending on where the 5-1 chart is, right? Is everybody okay with this one? Sell at the fibs. When the triggers are down really strong, you'll probably make more money. All right. Example of a second chance short. I think I did this one already. Yeah, we did this one already. All right. This is example of management using market flow. Now, I want you to notice something. We ended up with divergence and stranded buyers on the large chart. Again, look, everything was up, so I think you have to take a trend trade long. Is everybody okay with that? Everything was up. You had to go long. There's just nothing you could do about it. But because there was divergence and because we started to close below everything, I don't think we had to risk quite as much. Usually when there's divergence and stranded buyers and down signals, the second divergence usually keeps going down. So I think, you know, my note to myself was I should have had my stop where a new divergence was. So maybe I lost an extra point, which is not really a big deal. But again, when you see weak triggers and divergence and sell signals, this next divergence traditionally is going to go a lot lower. Anyway, all right. I hope I didn't lose anybody there. Again, same thing. Stranded buyers and divergence and an outer band and triggers that aren't very strong. You know, if you did go long for any reason, you'd have to be very, very careful about that. And you guys have seen this pattern, right? High volume area and mid bands usually makes a bigger bounce. Back to the large triggers. It's true on a 13 range chart, just like it is on a 13-2 chart. All right, now, somebody's going to ask me the question, can you just trade a signal on a 13-2 chart or a 13 range chart or an 8 range chart? Nobody's asked it yet, but you're going to. So I'm going to answer you. If you make a plan that says you can, yes, you can. Now, traditionally, this is going to be in combination or conjunction with your 21-3 chart saying it's an okay thing to do and your 13-2 chart saying it's an okay thing to do. Does that make sense? Yes, you can trade up here if all your other charts say it's an okay thing to do. That was the trade actually. Let me see. Bear with me. That was the trade I already put in there this morning. Since I actually did it, hang on, in gold, let's take a look at it together. You ready? All right. So this is that look that we were saying, yes, you can probably trade the area on the market flow chart. Does this make sense? So this is the type of look where you might take a trade just because of your market flow chart. Something like this. Either before or after the signal, usually after, but anyway. And finally, I have more examples of an 8-range market flow chart. I'm not going to go through those. Now, I also put in my plan some trade money management. You guys want to hear it? I know, again, you guys are more than welcome to steal, borrow, copy, emulate, alter, use, do whatever you want to do. I'm giving it to you because this stuff works, and I want you to make it your own. And you're not going to make it your own just by, you have to actually trade it. You have to practice it. You have to do it 1,000 times. So, again, I can give it to you, but practice it, okay? But look, hopefully you guys understand this. A 9 to 13 tick max risk stop. And I'll run it behind a 5-1 reversal bar, a new market flow sell signal. And traditionally, I won't move it at all if it's super high probability trade and I don't really even need to manage it. Pretty much just leave it alone and don't touch it until the market says. Now, remember what I said in this one? This is a really good example of what I was just saying in that line. Hang on. I just want to show you the picture again. If it's really probably going down because of your 21.3, your 13.2, your market flow chart, just leave it alone and don't put it in the wrong spot to get bumped out. Does that make sense? So that's the visual of leave it alone and let it marinate, and then eventually it went all the way down. So again, when I go through and read the rule, hopefully it makes sense. Take $200 on your first half and then $300 or $400 on your second half. If, it's one of those super strong trending days that, you can get a lot more, take a lot more. It's okay. But, $200 to $400, that's a really good window for what we do with our size charts. Take the money, take the money, take the money. Exit with higher and lower second or third divergences. You guys already know that. While taking 50-50 trades, you can take a little less profit and then get to break even. My daily goal is 800 a contract. And then basically I'll have a $200 trailing stop from equity highs. Now, I do it in 2 phases. And again, I'm not always the best at following my rules, but every once in a while, we have to talk about them, and I have to go over them again in my head because, look, if you're going to make $700 or $800 a day a contract, which I think most of you guys think is a realistic possibility once you really get good at our software, cut it off after $200 or $300, you don't really give yourself much wiggle room. So I take it more of an approach. There's a guy, Steve. He lived in Las Vegas, one of our clients. He goes, I don't stop trading at $400 or $500. He goes, I evaluate how I'm doing. And I was like, man, that's genius. If you take perfect trades and you're not breaking your rules, go walk around the block and then come back and keep taking perfect trades. Because if you take perfect trades that don't break rules, just because you lost $300 or $400 doesn't really change the odds of the next 10 perfect trades, does it? I mean, you're going to take them eventually, right? So if you took perfect trades, keep taking them. And if you get down $750 a contract, stop. Either you're off or the market's off. But now, if you were dicking around and you were breaking all your rules and doing stupid things, then you really need to stop after 400 bucks and evaluate why you're doing those things. So you have to really be honest with yourself in here before you go off and lose any more money. If you guys don't know yet, day traders suck at being honest with themselves. So I'm just going to throw that out there. So anyway, this is the right thing to do. It's not the easiest thing to do. And again, look, I wrote out all the trigger line reading basics that I use in the plan. So you guys are more than welcome to use that. All right, so let's take a little look-see at the market here. And Gary, if I wasn't mistaken, you were going short somewhere over here, right? All right, let's take a look at it and see if you guys want to look at all three charts just for fun. I got to go to the bathroom, so I'm going to go take a short, teeny tiny break here. But you guys want to look at all three of these together and tell me what you think? See if I'm full of it, or if it works. All right. Now, remember, this is the slowest day on God's green earth on the S&P. People are reluctant to sell. The whole day, I think that's your first trade. All right, I'm going to take a short break, guys. You guys stay tuned. I'll be back in about 5 minutes, and we'll go through any of your posts. Here, look, let me make a line in the sand in the room. If you guys have posts or pictures or things you guys want to go through, put them in after that. We'll go through anything you want, and then I'll be back in a few minutes here. All right, guys, I'm back. Alan, let's take a peek at yours. All right. Short and breakout with strong triggers. I agree. Entry at the area and stop out of the way, which was perfect. And again, this is one where you had to go off and risk a little more money than you probably wanted to, right? And then with a higher divergence with your weaker triggers, obviously you're out of the position. Now, remember what I said in my little picture? Again, look, the question is, do you get to take it twice, or should you leave it alone, or what should you do with it? This is very much like the picture that I had posted to you guys. Again, I'm not saying it's going down still or not, but remember, here, let me find the picture, because I think it's cool when you actually kind of relate, you know, what did old Novak say, and then what the hell happened in the real world. And the more you see it, the better it is. But let me see. Got to figure out where it was. This is the line right here. Do not put your stop at the best place to go short if the market flow agrees. So let's look at the picture again, because it's going to look very familiar to you, and you're going to be like, damn it. Many times the market will retest the high volume area of a signal short and then go down all the way after, without you. Everybody cool with this picture? Again, this is the picture, just so you have it. Just everybody understand it? And again, when you see it in the real world, you're like, mother scratcher. Look, they came right back to the high volume area, and what happened? Smells familiar, doesn't it? Now, would you stay in? Why would you? So, you know, again, this is where I think you have to have more than just one chart telling you something. You know, this is that spot right here. Could you make a case that the 21-3 chart agreed with that thought process? Anyway, food for thought. But this is a good example of, you know, again, you're not going long with these triggers. And again, the market's kind of choppy, but it's choppy into the downside. Everybody agree? Like if I put the 13 range and the 21-3 together, you can kind of see it a little better. This is literally exactly like the picture that we just went through. There's your higher divergence. It gets you out, and then we'll have to see if the market follows through or not. It's kind of slow today, but anyway, food for thought. Sometimes you can take it twice, and, you know, again, at some point you have to give up. We'll see what happens. Anyway, a good example of them coming back to retest that area. Now, what would change our mind about, you know, again, I mean, I think this is enough to change your mind at this point. If you did go short again or you stayed short, you have to really think about it after multiple divergences. We'll watch the 13 chart here and see if they change their mind or if they're going to keep going down. All right. Anybody else have charts that you want to go through? From earlier. Post them in again. Let me rephrase that. If you have charts that you posted in earlier, please repost them again. All right, let's look at some gold. Gold's been a hell of a lot more fun than the S&P lately, if you haven't noticed. Here's gold today. A little bit more fun than the S&P. What do you think? And again, look, there's some key spots that, you know, again, stand out. When I look at this chart, there's key spots that stand out. This is one. This is one. This is one. This is one. Obviously, we get fibs. right? And then we get down to fibs, but we don't really roll the triggers. And then, you know, eventually this is the area over here I think we have to contend with. Should have put them both together. All right, so when you say trend changing direction, you're expecting it to reverse from the one-to-ones, okay? So I guess the best thing that I can do is give you my rules, right? So you're hoping that it turns. But, you know, look, if we were to, let's just sum total your trigger lines, okay? This is, I think everybody fails in the trigger lines first. So again, let's write out what we see in our trigger lines, okay? And tell me if I'm off base here. And so large triggers are up. Can we agree? And then small triggers are up. And then when we look at these triggers, look, we have to look at price relative to our trigger lines. So where is the price itself? Now, I'm going to go back to my little PDF here. And again, look, this is for me, but you're more than welcome to steal it if you want. Add a good top or bottom. This is my rule. Because, look, I have the same... I hope that little bastard holds itis thing, you know, and again, what happens is it puts you into risky situations. I think it might hold, therefore I'm going to go short. Well, sometimes you get away with it. But when you look at, you know, look, I'm going to tell you right now, for the next 9 years, you will win some and you're going to lose more than you win. Until you give up doing this, you're going to lose more than you win. I guarantee it. Anybody want to take a bet? How many people have tried this 1,000 times and lost 800 times? I've done it, so I know. It doesn't work. It just doesn't work. Now, this would be the type of look right here. You see where I'm pointing with the yellow arrows? This is where the small chart finally says over here that we're going down. And you can make a really good case for going short right there. So the trick is to wait for this look right here to happen over here. If it never happens, then you don't try to be first. Here, I'm going to give you a picture of that. So again, sometimes you get lucky, but getting lucky is called practicing long-term failure. If it's really going to go up from a bottom, right, you're really going to get the right trigger line look and everything's going to go up. It's just like this top right here. It might hold, but you might look up an hour from now and it's broken and gone up another 100 points. Who knows what's going to happen? So it might hold, but might hold is not enough to go short. Getting lucky is practicing long-term failure. That's exactly what it is. All right. So now look, I'll only want to look at my 13 range chart. Watch. And again, look, this is, for me, it slows me down. Remember, we were talking about shorts up here at resistance with all the triggers going down. Some of you guys went a little earlier with the 5 range, 5-1 chart over here or whatever. What's changed to make me think it's going up? And again, this is the way this is the way I use this chart to slow me down. I can't go long when my triggers look like this. We're probably going to end up down here somewhere. So that short trade that you wanted to take over here is still going to end up at the right spot eventually. Right? So again, look, this is a good example of what I showed you earlier, which is they normally come back and retest the best spot, and then what happens? Triggers are down, white paint bar up, we get a down arrow. All right. 2-minute timeout, 1-minute timeout. I'll be right back. All right. Sorry about that, guys. I'm back. So anyway, look, when I look at this chart, there's no way to think about going long whatsoever, period. Not that it won't go up. It can. It could do whatever it wants. But at the moment, no going long. Now, I would like to find that same spot. Yeah, see, look, I was just going back to where you were going short. And again, look, it's trying to get lucky, and sometimes you will get lucky. And again, look, if you're willing to pay real money to get lucky, it's okay. Again, you just have to figure out how good you are at it. Anyway, the S&P is not doing much today. And again, look, we just had our third divergence from the same spot. So, again, shorts are kind of like, ugh. There's not much going on there. Now, termination conditions, you still have to pay attention to them, even if, you use a different chart. All right. No, Tom, I will not. I don't need it. All right, guys. Questions? comments, concerns? Tony, let me take a look at your picture you put in. All right, so trying a quick scalp. You know, again, Tony, this is the I hope I get lucky look. Look, this right here is the number one reason most people lose with Nexgen. And it's pretty much the same thing. I think, I want, I hope, just trying, wish it would, right? And again, you're fighting the trigger lines, like seriously. And again, it's not that it won't bounce from there, but you're risking a lot of money to make a couple ticks. And if you just wait and trade with everything, you end up making a bunch of money. So I don't know exactly how you ended up down money. I'm going to take a wild guess and say you tried some other really bad trades earlier, or maybe you did good trades and they lost. I'm not sure. But this right here, can you guys see this okay? This is the reason 9 out of 10 of you are going back to work as old men or women. You're going to be working at Walmart greeting people if you try this. It just doesn't work. Not that that's a bad job. I'm not saying it's a bad job, but if you want to be a day trader, trade with them, not against them. All right, so let's take a look at our gold just for fun. And again, look, it's really easy to see that we were talking about a top and then potential short trades. Yes. And again, this is, you know, again, this is a much more volatile version of what we're looking at in the S&P. So you see how the triggers are down and nothing but down. And again, it might hold, it might hold, it might hold, it might hold, it might hold. It doesn't really matter what it might do until it actually breaks out. Then you can go long. Does that make sense? See how, look, this is literally the first time. Oh man, I hope I don't crash my Ninja Trader. But we really close above all of the triggers after a good area held. That was the first time. And, you know, again, it's worth noting, what did the market do after that? And again, this is how I put this, you know, thought process together. Look. We get above the triggers, we have a tendency to come back and retest the high volume areas, and then we go up a little bit. And then if we test the small triggers, we get, you know, so this is kind of your momentum breakout of the triggers look. And then this should be the 5-1 trend trade look right here. Without even looking at the 5-1 chart, I can tell you that's the 5-1 trend trade look, and probably right here as well. That's not an arrow. What do you guys think? Visually, pretty easy. Don't go long until you break above all of your triggers. Think about how much freaking heartache you would have saved yourself. From over here at this yellow box, nothing, and then look, look, eventually a support holds that makes it break out. I could be crazy, but I'm not. Now, let's go back to the S&P. I know eventually you're going to be like, damn. Right? So if you're out of a short position, that's fine. Using my rules, is there any reason to go long yet? What do you see? Not yet. So look, this slows me down. This is what I use, so that way I don't go, man, I think it's going to hold. Because, again, it's not that you couldn't go long here at 59 if you really wanted to, but, again, if you believe in the triggers, and, again, we've still kind of a 50-50 trigger look here. If it's really going up, we'll close above everything, I promise. Here's your 13-2 look. All right, Ed, let's see what you got. Okay. I mean, you just kind of jumped in. Or was that your signal to go short? I was trying to figure out what the hell you did. I guess you just said we're going down, so I'm going to jump in and make a little money. So can you explain your logic on taking 3 ticks profit? What was your logic here? Look, I explained my rules to you, so I'm trying to figure out your rules. What do you think? This is what I'm looking for from you. And I'm not trying to beat you up, but yes, I am. Tight stops. Based on what? I'm cool with tight stops, but what is it based on? Based on what? Tight, like if you make an up bar, or you see why I'm saying this, right? I mean, everybody does the same thing, so it's really important to kind of go over it here. What's the rule? Come on. What's the rule for getting out of a position? And again, I think it goes back to the trigger line phase. What's the phase of the trigger lines over here? I mean, you believe it's going down, right? So where are the price bars in relationship to the triggers, and what are they doing here? I think they're going down. And then let's look at the triggers and the price bars over here. So you got a signal and you went short. Again, I see you have blue fibs here, but don't go short into them if you don't think they're going to break. So what's the phase of the trigger lines over here? So you have 3 charts that all have strong down triggers. I don't think there's any reason to get jumpy. That sounds like total bullshit, Ed. And I know you well enough to call bullshit on you. So if you're new and you're going, man, I would Novak's calling bullshit on him. That's, I don't want to lose. But, you know, again, don't take a trade you don't want to lose on, or you're not willing to lose on. And don't get out unless the conditions change. If the conditions change, get out. All right, I want to ask a question, and I want to answer from you guys. Looking at my 21-3 chart and my 13-2 chart. So what am I looking for, guys? Longs or shorts? All right. Now, the only reason I put this picture on here is because somebody's going to go, oh, you closed above your triggers. Go long. And that's not the way it works. You can't go long just because you closed above a 13 trigger. That's your warning for the day. Right? If you hit maybe here and closed above your triggers, that'd be different. So I don't want you guys to confuse closing above your triggers with, right? So you guys all agree we're looking for shorts, right? Let's see what happens. Now, remember in my little plan where I said if you have a white paint bar that closes down below everything, you can kind of do a momentum trade? That looks very similar, doesn't it? So not only from that spot where we said it was going to go down did you have a short signal, but you had a white paint bar that closed below everything, and then the high volume area. Let's take a look on here. So tops and bottoms momentum trades. Example of a momentum short with a white paint bar on the market flow. Tell me if somebody call bullshit on me if you don't believe it. Look at that left chart. We're anticipating down, and we get a white paint bar down and a little pullback with everything going your way. That was the one we went over this morning. So when we look at it live, what do you see? We were expecting down, you guys called it, and then you need permission to go short. Did this give you permission? I know it's not the easiest sell at 59 or 58.50, but they're never going to make it easy on you. Shogun, that's exactly the one we talked about in it. Anyway, look, it's just another way to look at your charts. And again, I think, you know, I think it has to be the cumulative effect. It's not just one thing. Okay, it's this chart said down, this chart said down, this chart had sell signals, this chart had a termination spot. So when the white paint bar closes below everything and get a little pullback, you know, that's your kind of continuation spot. But again, it happens right there, which it's not the easiest sell. You can't, it's impossible sell without the market flow. It's an impossible sell. But I think when you look across, and again, this is really, I think, the key to what we do with our software. Every chart agreed that the Fibonacci resistance may hold. Could do it. If you wanted to go short after the first signal from the spot where it said it was going to go short, you could do it. You'd have to sell right there, which I'm cool with. I don't care what you guys do. It's up to you. I'm just saying, you know, again, could be easier. All right, now, like I said, you know, again, we have to ask ourselves, do we want to go short with a trend trade short right here? What's the difference? Is there a difference? Do we get one more short? Is the 13 chart helping? Again, this is why I superimpose my 13 range triggers on my 5-1 chart. I dig them. You don't have to. If you did a short, one more, you'll be okay. It's not as easy to do when you hit a fib, is it? No. Nico, what are the trend trade rules? The trend trade rules are the market's going down and then you sell a pullback into the large triggers, mid bands, fibs, and 101s. Yes? You already had the trade. And if it goes back up there again, it's probably over. You already had the trade. All right, let's take a peek. How the hell did I make that bigger? All right, there we go. All right, that's it. Cool. Nice trade. Tony, same trade probably. All right, cool. Nice trade. All right, now let's see how far is she going to go, right? Again, you never know how far it's going to go, but a good, remember what I said in the, in my little plan? Just for fun. Here, let's look at it again. This is, again, real world of target one usually is going to be below stranded buyers or above stranded sellers. So this is where they retest the high again and you take profit. So look, if you were to put your target at fibs and or prior stranded buyers or sellers, check it out. I don't know. Do we, Jose? What's your take on a blue fib? Here, let's get your take again, Jose. The blue fib in question, what's your take on it? What do you think? Is it going to hold? Again, you may or may not use a 21-3 chart. Right? So again, look, you never know what's going to happen, but remember when I said that we want to make sure that our trigger lines are going up or we close above them. Obviously, you can't trade into a fib. So now look at how far we are away from doing long signals. We're so far away from doing a long signal, it's hurtful, isn't it? So it had to be shorts or nothing. We had a momentum trade with the white paint bar. I mean, if you wanted to get really fancy, you could sell up off of the resistance. But trend trade short here. And again, I'm a fan of one-to-ones and outer bands being a good target area. We usually will get a little bit of a bigger bounce off of the outer band. We'll see if it happens or not. It's a good spot for a bigger bounce. Any ideas on how high they could go without changing the trend? What's the number? Here, let me give you a number to look at. What do you think is the highest number they can get to without changing the trend? Would you say about right there? I think that's the highest number they can get to without changing the trend. I think realistically, we're probably headed to 46. All right. Are all the triggers down? So again, you're not looking for anything but shorts or nothing. It's very relaxing. It's slow, but relaxing. Remember how they said, oh, they might hold at the fib? I drew a little arrow there just to see what would happen after the fact. Trading against the trigger line sucks. That proves it. That was gold. All right, guys, questions, comments, concerns, things you guys want to go through? I think we've had a good day, right? I've given you guys at least a lot of stuff to think about. You know, I think what we do, Shogun, the answer is no. I mean, technically the answer is yes, but in the beginning I would say no. Because the most perfect trades on the planet can still lose. And what happens is you end up taking a one lot on trades that end up winning, and then perfect trades that look like they should win, you end up losing, and you lose on a 4 lot, and then you're like, what the hell? And you throw your numbers all off. So I think on any one given day, it's probably better to be consistent. Yeah, but I've done that several times. Like I tried that with the Apex in the beginning, where I was like, that's the mother load. I'm going to do a 10 lot, and I'd blow out the account in one day. And it's like, what the hell? Because the one trade that was perfect lost, and I'd get blown out. So I find it's better just to be consistent. Same number, pick a number, trade your number, trade it all day. If you make a bunch of money, add one on the next day. I find it's better to just be consistent. Cal, why is the 5-1 taking this shape? I have to click that thing. I've never seen that before, so I don't know what the hell that is. Hang on. This is new to me. Why is the 5-1 taking this shape? Do I get to download it? I don't know if that's helpful. I don't know what that is, Cal. I don't know what to do with it. I guess I'm old. Rain, I love the question. Would you mind a quick recap of the beginning when transitioning from 13.251 to using the market flow chart? I personally think you guys should transition with an 8 range chart. Let me open these up. So in the beginning, because look, an 8 range chart, this is an old picture, but an 8 range chart is very, very, very similar to the 13.2 chart, 5-1 chart. So I think in the beginning, Rain, it would be prudent to take 5-1 trend trades when the 8 range chart triggers are really strong. I think that's your first step. It's simple, it's easy, the triggers agree, and you take trend trades on your 5-1 chart when the 8 range triggers agree. Easy enough. I think that's the first step. The second step comes in when you have a bottom and you're like, okay, that's a bottom and it's really good. And when the triggers roll over, I'll do a high volume edge trade. I think that's the second step. And I think the 8 range triggers are fast enough that they won't, you know, you have to really be good at reading tops and bottoms and having expectation for where, like right now we're going to 41, 46 on the S&P probably. You know, having that expectation of where we're going is very, very helpful. When you're looking at right now, the 8 range chart gives you a better right now read. Gives you a better trend trade short read right now. This is a little bit of a messy chart. Sorry about that, but anyway. So I think you use the 8 range chart for high volume area, top and bottoms, and for 5-1 trend trades. And then if you want to transition into a little bigger chart because you need to slow it down, then you can do that. And I did both. I actually had the 8 range and the 13 range together. And what I found is it gives me, Have you guys watched that Tom Cruise movie, The Last Samurai? Because me and Mark say this all the time. When the guy's fighting and he's like, you have too many minds. You're minding the sword. You're minding what other people are thinking. You're minding this and you're minding that. And when you have too many charts, something's going to mess with you. So you have to kind of, 13, 2, 5, 1, 8 range to start. And just trade those three and those three only. And then if you get good at that and you want to branch out and look at some other things, then you can add on a 21-3 chart or maybe a 13 range chart. And then you can figure out what suits you the best. Jose, here. There you go. I just dropped it in there for you. No, Shogun. All right, so that's a good question. So look, this is the answer right here. Hold on. This is what you're looking for in the beginning. And you can substitute 13 range small trigger lines in this text with 8 range large trigger lines. All right, cool. Yes. The range chart validates what these charts say. The dynamic Renko charts drive the bus. The market flow gives you validation at the tops or bottoms or with the trend. How's that? Is that better? Renko bar charts drive the bus and set the patterns and tell you whether you have a good top or a good bottom. Market flow helps to confirm those things. That's a good question. So look at this chart first, your dynamic Renko bar chart first, and say, I will if what? I will go short if. I will go long if there's a breakout because of this. I will go short if there's a breakout because of this and then this. And I'll keep going short unless we take out this, right, or whatever. Well, gold trades $10 a tick. So for me, 20 and 30 ticks is the initial setting. Sophia, that's $200 and $300. 20 and 30 is what I would set it at, and then manage from there. All right, guys, I'm going to